Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined once again by Jason Les. He's the CEO of Riot Platforms. They just came out with their Q4 and full year earnings, and that's what we're going to be talking about in today's presentation. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of Riot, what you thought about their Q4 results, and your outlook for the remainder of 2025. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, highly anticipated and very timely given the market conditions today. Q4 earnings interview with Jason Les, the CEO of Riot Platforms. Jason, Anthony and I are in New York this week. We just finished listening up to the earnings and wanted to get into some of the details here under the hood about Riot's strategy, obviously the HPC AI, and really the plans for 2025 looking forward.
Awesome. Well, thanks for having me on. Let's get into it.
Sounds good. So first things first, can you just give us a quick high-level summary of the Q4 numbers, the full year numbers, and maybe some of the highlights in your opinion?
So for Riot, I think the two key highlights, or a few key highlights for us in Q4 and for the full year, we're hitting record levels of revenue, record net income, record EBITDA, adjusted EBITDA. And a lot goes into this. Of course, yes, we had the rising Bitcoin price. That certainly helped us on the mark to market for our Bitcoin balance. But what you also saw from Riot is our operations ramping up significantly over the year. Q4 was the first year that we saw a lot of Corsicana online, not complete, and then a lot of our Rockdale growth online also not complete. But we really saw the benefit from that in mining over 1,500 Bitcoin in the quarter, of course, post-halving. So we're really proud of the results that we were able to show here as a result of these efforts. Revenue for the quarter went from 67.5 million to 126 million. So really big jump quarter over quarter there. Our hash rate obviously increased a lot quarter over quarter as well. Net income was 154 million loss for Q3 and then 136 million gain for Q4. Of course, a lot of that driven by our Bitcoin treasury strategy increasing in value as well, but clearly succeeding in benefiting from the upturn in the Bitcoin market alongside our operational execution, which has continued to be very strong. So we're really happy about that. And then I think you saw a major theme of our earnings call was talking about what we're doing with respect to our AI HPC strategy as well, aggressively going after how we can maximize the value of our power. We have a huge portfolio of power, both used and unused capacity, unused being a pretty significant amount here. And we think with how the market is rewarding growth in the AI HPC space, with our assets, we're very well positioned to execute there as well. So you saw a mix of a bunch of exciting topics, I should say maybe a handful of exciting topics here, executing on the Bitcoin mining operational growth, Bitcoin yield increasing, value of our Bitcoin going up, and now us diving headfirst aggressively into the AI HPC opportunity.
Yeah, I mean it's a good set of earnings there, and hopefully this blip that we're seeing the last probably week of Bitcoin starts to recover to, avoid having any sort of issue with the next earnings due at the end of March, because obviously as you highlighted there, a big part of your earnings was in the revaluation of the Bitcoin value on your balance sheet there, and that was an like many of the other miners who've got HODLs, it's a real benefit this period. And CleanSpark, the first to release their results, had a similar position with theirs where they had a strong gain.
On that, Anthony, just what's I think strong about our strategy is it's in addition to the value of our Bitcoin going up, it's increasing the amount of Bitcoin, increasing Bitcoin per
Yeah.
share. And I think we are particularly proud that we were able to get a Bitcoin yield for 2024 of 39%. A lot of that came from the timely convertible debt offering we did at the end of the year, but a good portion of that also came organically from our Bitcoin mining operations. Adding Bitcoin to our balance sheet for monthly production and not selling it drove that as well. And we had a good slide in our deck that highlighted the incremental value we've been able to appreciate from by doing that strategy. So yeah, Bitcoin yield, key part of the Riot strategy.
Yeah, no, absolutely. I mean, operationally wise, we've been covering you for a number of years now. We've been highlighting this last probably ever since we arrived at Corsicana last year that there's been that improvement month by month. I mean, we were highlighting a hole before Corsicana visit, and you know, kindly updated the retail investment community as to why that was occurring. But we've seen sort of month by month over the last sort of 5, 6 months some strong gains in your operational hash rate, which have obviously then helped towards these results coming out. And looking at your power cost in the accounts, I mean, it's probably one of the lowest in the mining community, similar to what Irons have produced, because you're both operating in Texas, you're both benefiting from the market rate, certainly at Corsicana. Can you tell us a bit more about how that power differential between Corsicana and Rockdale came about for the year?
Yeah, so all of these facilities that you're mentioning, they're all in ERCOT. They are in slightly or different load zones that have their own pricing. Corsicana is in load zone north, and then miners such as Iron, they're in load zone west. So the prices are often correlated, but not always. You will see
Yeah.
differences driving those different power prices. In Riot's case, at Rockdale, we have a number of hedges totaling 345 megawatts that go out to a number of years. We procured them at opportunistic times, so the prices in those hedges are low. Now, what we're able to do is effectively trade that power, execute on our power strategy in that market. When demand for power is high, we're curtailing our operations and we're able to earn power credits, offsetting our energy bills by not using power. And we also participate in ancillary services and that sort of thing. Going into Corsicana, we did not procure the long-term hedge. And that was a question we got a lot a year ago. Hey, are you going to hedge your price? You're going to fix your power price for Corsicana? And our message to the market was, we don't think that's a good idea right now. You know, the hedge prices, they reflect market sentiment, emotions in the market. We thought that the forward curve was elevated relative to what we could achieve procuring power in the market at Corsicana. So we opted not to do that. That's really a great advantage of Bitcoin mining and getting low power prices. If you have the flexibility to shut off during these high price hours, you're trading a small percentage points of operating uptime in order to get a significantly lower power cost. So we've been able to achieve a competitive power cost at Corsicana regardless. We are starting to do very small strategic hedges with Corsicana, not 24/7 for the next 5 years. We're picking different volumes of power at different periods of time, small relative to Rockdale, but because of that, we are still generally the power price that we get at Corsicana is generally driven by the market price. That went up a little bit in Q4 versus Q3, but you can see all in, we're driving a very competitive cost of power. For 2024, our all-in cost of power, net of all fees, taxes, everything, 3.4 cents per kilowatt hour across our portfolio of sites.
Jason, one topic we talked about in a prior podcast, maybe two, that I haven't heard a lot of other people talk about is the transmission benefits that you're going to receive at Corsicana this year. So you just mentioned the power price Q3 versus Q4 had gone up slightly. When could we expect to see some of those transmission benefits come in?
Yeah, I'm glad you brought that up, Bryce. So in ERCOT, you can basically earn a reduction on your transmission costs for the load that participates in the what's called 4CP program over the summer months in Texas, June, July, August, September. So we participated in that our early months there at Corsicana as that facility ramped up. But you don't get the benefit of that program until the next year. So when we're participating in 4CP in 2024, we're earning the reduction in transmission costs for that portion of load for 2025. So as we get into 2025 here now, we will have reduced transmission costs for that load that participated. Now, we weren't all the way ramped up in Corsicana over the summer. We're using significantly more power there now than we were in the summer months. So we're not reducing transmission on all of that load, but we're going to start appreciation from participating in that program for a good amount over this year.
Are those transmission credits always a sort of like 12-month rolling, or is it the fact you have to be there a year before you start being entitled to receive them?
It's based on your participation in the previous year's
Right.
four coincident peak months. The level you participate with load then saves you in the next year. So if you participate in 2024, looking back, it's not like you appreciate
Yeah.
those reduction in transmission costs that year at all. It's all
So the
about
transmission
next
benefits
year.
for 25 will appear next year, then, will they, at Corsicana?
Right. So we participate in 4CP in Corsicana this summer, with now the incremental load that has come online since the last summer, then that would be earning
Oh,
additional reduction in transmission cost for 2026. That's correct.
yeah. And I'm assuming, yeah, I mean, there's, you can't book any value of that onto the into the accounts or earnings
That's
because you're not
that's correct. And
receiving it.
we don't report it in our monthly updates as if we have earned it until we are actually
No.
realizing it.
In terms of I mean, your accounts are quite well set up. So you do split your accounts out into the various business units. You've got your engineering services, and you've got this other services, which I think still got some of the hosting elements. Can you give us an update on sort of like the hosting position? And I believe you mentioned on the call about the litigation costs and all of that. I'm assuming it's maybe some associated with that. But how far down the line are we now getting this rectified?
So you're correct on our financials. The other bucket is primarily all, I believe, 100%. It could be off by a small amount of our related to our legacy hosting business that
Yeah.
exists at Rockdale with one customer. We are in litigation with that customer. Timeline of how that concludes is unpredictable. But as I noted on the earnings call, unfortunately, we have elevated cash SG&A expense associated with legal fees with that right now. So unfortunately, can't give any more
No,
color
no,
than
no, no,
that.
no, no, no. I don't know. But in terms of those costs themselves, are you not? I take it you're not treating them as one-off costs because if the one-off costs, would you not be applying them to the adjusted EBITDA calculation?
You're referring to the one-off cost within
If you have
SG&A.
litigation costs there, which you could
Yeah.
assume, say these are one-off costs, would they fall into the adjusted EBITDA where you can take your one-off expenses off your EBITDA?
The way we report it, we do not adjust that out in adjusted EBITDA.
Okay,
I think a lot of that has to do with it's not its own line item. It's
right.
talking about a bucket of expenses within SG&A. So,
Okay, that's fine.
yeah, investors have to just kind of rely on our commentary of what is included in that bucket of cash SG&A expenses.
Yeah, I mean the challenge we had this morning because last night we had a meeting to go to, but this morning is going through the accounts. It's your calendar year earnings, it's your full earnings. For other miners, it's like Q1 or Q2, and I'm sure there'll be a Q3 coming out as well. It's everyone has different calendar years. You're reporting on the whole year and showing your margins and everything like that.
Right.
It's sort of a challenge then when you sort of say, well, these are rights results. How do we compare them to the other mining results there? So I was trying to strip out this morning effectively the Q4 by taking your previous Q3 numbers and sort of like saying, well, the difference between that and this is the Q4. And it's not an exact science because Q3 is not audited either, so there could be some sort of like minor changes between what you released in Q3 and what you've put in your final Q4 there. So
We did break it down on our earnings deck. We broke out Q4
you
in a
did
number
break,
of
yeah,
metrics.
for the
So yeah,
margin. I saw that for the margin,
yeah.
yeah, and you showed that a similar thing that I've been producing in my sort of comparison tables, the breakdown of
Yeah.
the Bitcoin as well. So that was all useful. In terms of obviously Q4, when you look at that, because when you're looking at the whole year, you had a pre-halving part of that year where you're obviously benefiting
Yeah.
from a higher hash price versus the fact that you've grown your hash rate significantly through the year and you've lowered your efficiency and you're been achieving really good energy costs. So Q4 in terms of how do you see Q4 as a standalone quarter compared to the other quarters?
Well, I would look at Q4 compared to Q1 in light of the halving and everything that took place there. And I think what's important to note for Riot is we ended the year mining just about the same Bitcoin
Yeah,
per day as we did at the start of the year, despite the halving. And despite network difficulty going up, I think 65, 70%, maybe more than that over the course of the year. I don't have the number off the top of my head right now. So the increase in network difficulty, the halving, those are two major headwinds that all miners were facing. And because of the growth that we achieved, we were able to mine a consistent amount of Bitcoin and at the year-end position compared to the beginning. Also, because we're good on our energy costs, because we've been scaling up and starting to achieve economies of scale, and because the new miners that we're deploying are latest generation equipment in terms of power efficiency, our margin for Q4, gross margin for the Bitcoin mining segment at least was not that much less than Q1. So when hash price was higher in Q1 and obviously pre-halving, we had a 56% gross margin. In Q4, 50%. This is the result of us scaling up with good equipment and focusing on operational efficiencies.
With the Corsicana site being like fully immersion cooling, and you have your 200 megawatts at the Rockdale facility, you're the largest miner with any immersion cooling within their business model. Are you seeing the real benefits during the winter periods? Are you having less effect than maybe some of the miners who haven't got that type of technology?
Well, I would say the winter periods are not really when the benefits of immersion are specifically applied to. When we talk about immersion more generally, we think about the lifespan of the equipment. If we can keep these machines operating in more stable, cooler temperatures for years, what does that do to them? And from what we've seen, it helps reduce the amount of maintenance, repairs required, so we can get as long of a economic life out of them as possible, even past their depreciated. That's one of the main benefits that we see with immersion. And then there's the opportunity to overclock as well. We're not doing too much of that at scale yet, but we're thinking about that. Another real benefit of immersion is the density that you're able to achieve there. We're able to put so much, and you guys saw the facility, we're able to put so much more power in one location by using immersion cooling and not having the same type of challenges you would have putting that much air cooling in a single location. But in general, Corsicana is running very well, definitely benefiting from the improved and immersion design. There's different types of maintenance that go on with doing immersion as compared to air cooling, but you're seeing in the monthly results, we're getting pretty solid average operating hash rates as a result of doing that. And obviously, the summer months is when the real challenge comes in for all miners, and we'll see how everything hangs up there. But we're very optimistic about this new design.
Just final bit on where you mentioned repairs then and the benefits of the immersion cooling. We've been to a site not too far from Corsicana, the dental facility for Core Scientific, and they highlighted how many repairs have been completed in that first 6 months of that facility, and it was like 11,000. Are you seeing them having ran these businesses in both air cooled and immersion cooling? Are you seeing this massive drop down in sort of like requirements for the immersion cooling machines?
Well, I think we need to gather some more data on that because there are other variables at play here as well. We're also using these micro-BT machines now at a wider scale. That is now the vast majority of our fleet. What's great about their machines, they're very robust. Not only are they very competitive with what's on the market, but they're engineered to really high quality. So these machines in both air-cooled environments and immersion cooling environments are operating a lot stronger. So I don't have good data for you yet. And, it depends on what you qualify as a repair. Are you doing chip level repairs, PSU, maybe just swapping out some fans? But on that specific example alone, in immersion, you don't have fans. There's no fans on the miners to repair. That's a common thing you deal with air-cooled miners. But to be fair, then we have immersion equipment and there's repairs and maintenance on that you maybe wouldn't have to deal with in an air-cooled facility. So there's pros and cons to each. There's not a right or a wrong way. Right? We operate both at pretty big scale. It depends on the specific application, the specific problem you're trying to address at that time, and kind of what the market looks like.
Hey, Jason, I'll jump over to the AI HPC topic now. I know that was a big focal point of the presentation and of the questions that went along with that. Just one follow-up on the depreciation comment. You said the real benefit of immersion is to extend the life of the machines past the depreciation date. Do you guys use a standard depreciation time frame for all of your machines, or is that up to your discretion? And are you able to share what that time frame is?
Yeah, so we depreciate our miners on a 3-year schedule, and that was a change we made last year. It was previously 2 years. So we've always been on a pretty quick depreciation schedule, I think, relative to what you actually see the useful life of these machines being. It's not a decision that a management team has discretion on its own to make. You're working with your auditors, etc., to get to an appropriate figure. So we depreciate on a 3-year schedule, and we believe by having good operating conditions, by maintaining machines well, that these machines have the potential to have a useful life well beyond those 3 years. But you take a big depreciation expense up front in order to get there.
Yeah, you sure do. But so you use the 3 years for air cooled and immersion,
That's
regardless, all
correct. Yeah, we, we,
machines.
we don't
Yeah.
delineate. Both machines are, both applications are a 3-year depreciation life.
Great. Now, we'll move over to the HPC AI. So I know this was obviously a big topic. We're talking about the Corsicana facility, 600 megawatts still to come online. You've got 400 megawatts already energized. When we were down there, I remember the first question in the room in the investor day was about HPC AI, and that was quickly shut down. Now, obviously, you've changed your stance on that. I wanted to ask you, what were the key or fundamental reasons for that change? Was it Bitcoin price? Was it seeing other miners in the West Texas area starting to attract interest? How did that conversation change internally at Riot? And ultimately, what was the factor that said, hey, you know what, we want to give HPC a go here?
So back then, I think that was soon after Core Scientific announced its at least bigger deal with CoreWeave, and when that got a lot of attention. And our position at that time was kind of just based on the truth of the circumstance. We didn't have anything like that going on, so we didn't want to be overly promotional or act like we were doing something that we weren't. However, since then, we started getting inquiries. We started doing a lot more work behind the scenes on this. We've been in discussions with large players, and all of that additional information and discussions drove us to start making the shifts that we have. That's why we engaged Altman Solon to begin our feasibility study last month around Corsicana. We paused the Bitcoin mining expansion, or halted the Bitcoin mining expansion at Corsicana in order to make sure we maximize their optionality there. And now this is a key focus of what we're working on. So I think the short answer to your question, Bryce, is getting new information over time, putting the work in, and then being able to come to the market with a much more informed view of how we want to move forward.
That's great. And just one follow-up, Anthony, and then I'll let you go here. The Altman Salon partnership, we received a specific question about that last night at PubKey. What does that company really bring to the table for Riot? And are they able to give you, I know this was a question on the earnings call as well. Did they give you any potential timelines for what these type of deals look like from start to finish?
They didn't give us, those type of timelines. What Altman is doing a deep analysis of what is possible to be built on this site and kind of the range of technologies, build decisions that you could do to build an AI HPC data center. I talked a little bit about that on the earnings call, the kind of spectrum of things that you can do and
Yeah.
the different trade-offs across that spectrum. In addition to that, they have been doing a lot of research on what our total market opportunity is. And that's one of the things that makes Corsicana really exciting and valuable is as opposed to being in a remote location, it's very close to a data center market. So not only a facility in that location, not only can we, of course, accommodate generative AI training, we can also accommodate generative AI inference, and then we even have the ability to participate in cloud market as well. So a lot of great, exciting things about that facility. So they're looking at the feasibility first, and then the next phase is looking at what does going to market look like? What is a more detailed view of the customer base? Of course, we're focused on a small customer base here, focused on blue chip counterparties, hyperscalers, etc. And they can help inform us the most effective way to go to market and execute on getting an agreement signed. Timeline, that's unfortunately unpredictable. Not going to have anything concrete for you there at that time, except to say we're aggressively moving forward as fast as possible.
In terms of your power at Corsicana, you've got the 400 megawatts energized, but you're going to have to install more power there to utilize the remaining 600. What are you doing in regards to that? Because obviously the decision to mine or to go HPC is still, in the air. To be honest with you, until you decide to go with HPC partner, you've still got a site that needs to be utilized fully. So, is there things that you can do whilst those conversations are going on, that study's going on, rather than sort of wait sort of 5, 6 months and then realize we've now got to then order these equipment, get them installed, and start, looking for funding to build these facilities?
Absolutely. That was another key part of our announcement. When we announced we were halting the phase two expansion at Corsicana, that pertained to the Bitcoin mining side. We are still expanding out that substation, adding an additional 600 megawatts, taking that to the net to its full 1 gigawatt of capacity that's been approved by ERCOT. So that's another thing that makes the site very
Yeah,
valuable. We have 400 megawatts operating today, and because we've already procured the high voltage long lead transformers in the past, we now have the next 600 megawatts coming online at the beginning of 2026. That's a pretty valuable timeline. That means Corsicana has power today, and as
yeah.
Corsicana and then ramping up significantly in 2026. So that substation expansion continues. We're also working on bringing more water into the site to maximize the amount of options that we have with cooling, and there's other ancillary things going around the site to make it an ideal campus. I think we made the right decision by building Corsicana as a professional data center like campus to begin with. This is not, your typical thrown up quickly Bitcoin mining operation. We built this at a higher standard, and that took time and that took extra cost. And because of that, I believe it puts us in an advantageous position as we look to execute on a deal and we're having conversations with these potential counterparties.
Good points, and you raised a good. I mean, I was hoping you were going to come out with something along those lines, Nancy, because you are getting closer and closer to be ready now. We've seen other companies go out there saying they've got access to power at various sites in the future, and it's going to take 2, 3 years to
Mhm.
get them developed. And now that you've made a decision to look into HPC, it sort of maybe moves you ahead in sort of maybe the potential pecking order for hyperscalers if it fits their own calendar diaries.
Yep.
As they start to spend these tens of billions investment in the HPC AI space.
Yeah, I mean, look, there's approximately 4 gigawatts of power being utilized in the US for AI training inference today. That is expected to grow to 30 by to 30 megawatts in the next 5 years. So that's an incredible amount of growth. There's a real premium that's ascribed to power that's sooner to access. Power in 2025 is more valuable than 2026, which is more valuable than 2027, et cetera, and all the way out there. So, in addition to its proximity and other attributes, the fact that the power is coming here in a quicker timeline makes the site very attractive.
Hey,
Yeah.
another question there, Jason. When Core Scientific was conducting their customer or client search, they had a few prerequisites. I think $100 million investment. They had certain timelines, megawatt restrictions to even get into those conversations. Does Riot have a similar framework, or at this point, are you pretty much keeping it open to any option? And I know on your earnings call, you had mentioned you would be open to selling these campuses, unlike what we've just heard from Iron, who wants to operate their own. Do you have a preference at this point on sell or operate, or again, are you just open to anything that comes your way if it's the right deal for Riot?
I think the important part about how Riot's approaching this is that we're open and we're looking for the value maximizing, route. We're not looking to say, hey, this is specifically the way we want to do it, and we'll see what we're going to be able to get done. I think by remaining flexible, by showing that entertaining all types of offers, that's going to allow us to get the best result for shareholders. So we're coming into this with a open mind of how to proceed. Yeah, I'd say the other thing, on the point about time to market, as a lot of people are rushing to get more power capacity, what it's looking like is over the long term, generation isn't the main constraint. It's building transmission. And right now, if you're trying to build a new data center, you're looking at 4, potentially 5 years in timeline to get an interconnect approved. That is not even including procuring the substation equipment you need. Of course, you could do that at the same time. That's looking at 4 years as well. So, anyone who's looking to get a competitive advantage in this AI arms race benefits tremendously from power capacity up front now. And we think because we have so much capacity available, we're positioned to benefit from the competitive tension between all these companies. So I think a really good position to be in with this much power at this stage.
So, Jason, from a workforce perspective, obviously, when we were at Corsicana, you had about 500 employees on the site at that time there. Now that sort of like we're getting to the end of those 400 megawatts being completed, and obviously the decision's not been made about the next stage, is it a case of that workforce draws down now, and when required, will ramp back up again in the future?
I think a lot of the workforce that was there just for expansion, it was from in the form of third parties helping out with the expansion work. So there isn't an anticipation to need to change the headcount out there now, just because that phase two is not that would impact future hirings. I don't think it impacts our workforce on the ground right now. But on the topic of the workforce, while we're looking at bringing in the additional talent that we would need to execute on an AI HPC opportunity on the development side specifically, we have positioned ourselves with a lot of strong talent already. And you think about the cooling technology that these types of data centers built, while it's different, it utilizes similar components to what we do with immersion cooling, which we have a ton of experience with, and we have a team well experienced with that as well. In addition, one of the things that we announced on our earnings call was we acquired a company called E4A Solutions. E4A builds and maintains medium and high voltage substations. And I think this is a real important thing. Just as Riot had the foresight to acquire ESS Metron in 2021, before the supply chain became very constrained on low and medium voltage switchgear, I think you're going to see a lot of constraint around the specific electrical engineering expertise needed to build and maintain these large scale facilities. So the fact that we brought this in-house, it makes us better at Bitcoin mining, yes, but it gives us a competitive advantage in data center development as well. And the other additional benefit helps augment our engineering business now with the service line to support after sales.
Yeah, actually, I was going to ask that question a bit later on because obviously in the update there we saw that you'd made this purchase in December of this company, and it's another engineering company. And me and Bryce were chatting today already about having two engineering companies as part of the Riot Platforms
Well,
family.
it all comes together now. And the reason isn't because, we decided we wanted to diversify in engineering. It's kind of this platform vision in that we bring in these companies that support and make us better at the core strategy, our core operating capability. And in addition, they have the ability to foster and grow under the Riot Platforms umbrella. And these add-on acquisitions make them stronger together.
The challenge is always with finance people is it's explained to the finance people how the company's benefiting from these, because the finance people look at the accounts and they're saying your sales and engineering was this amount, your cost is this amount, and the last few quarters the costs have exceeded the sales. But that's not the underlying factor. The fact you've got these engineering companies as part of the Riot Platforms group means you're saving costs that you would normally have paid out.
In other
and
ways,
and
yeah.
that's where the challenge is to try and illustrate how that's occurring.
There's a really strong operating synergy there. But nonetheless, the engineering results are really negatively impacted in 2024 by having one large agreement work order with a governmental entity took way longer than expected. Delays with parts made the results, worse than ideal. But as a result of that being cleared out, and as a result of E4A now being a part of that engineering segment, we had a good slide in our deck forecasting what we believe we're able to now achieve in that segment. And it's a pretty significant increase in revenue from 2024 to 2025, as well as an anticipation that we can improve the gross margin from a slight negative to a positive.
And some of the services that these companies provide are outsourced as well, so that brings in revenue from when they're actually working on behalf of Riot effectively.
Yeah, ESS Metron, they're producing low and medium voltage switchgear, as you can imagine, for a ton of data center projects right now. Riot's actually a small part of their overall, revenue base. And then E4A is, of course, helping Riot with its core operations, but serving a host of clients, particularly in oil and gas, that desperately need that type of support right now. So they help us, they help each other, and we drive better financial results all around.
That's great. Now, one final one for me, Jason. We're getting into the last couple questions here. Talking about the culture within Riot. So I've worked at corporate jobs before. Operational excellence is a corporate word they like to throw around, and I know you were bringing that up repeatedly during 2024. However, what I've learned is this is much easier to say than actually do and implement. And as Anthony mentioned in the intro, each month we're seeing consistently better operational numbers from Riot. You guys are really putting that plan into action. So, from a culture people perspective, how were you actually able to execute on that goal?
Yeah, I think it was important to us to set very big goals. Riot's utilization of hash rate was poor for a lot of 2024. And it would be easy to say, hey, we want to just improve a good amount. We're not going to set the bar too high, but we want to show solid improvement. But that we didn't feel like that was the right type of goal to set, and that doesn't build the right type of culture, to your point, Bryce. We set the bar high. We said we are going to get to operational excellence. We are going to be one of the best operators in the space. Utilization is not great now, but let's figure out how we can improve that on a quick timeline. And there's so many, I think, tools that came together to make this possible. But one of the things that you're really able to do to drive key results, it's not a top-down approach. Oftentimes, it can be a bottom-up approach using the concept of decentralized command, putting subject matter experts in charge and giving them autonomy to make decisions in their area. Of course, things have to be approved or whatever, but really listening to people on the ground and understanding where the improvements can be, what they're seeing, and aggregating that all together. That's how we got to this great result. We improved our operational excellence not by something that I was doing or our executive team was doing, but it was empowering people on the ground and leveraging their talent and expertise. And I think we're seeing the results. Operating hash rate has improved tremendously over the past few months, and I'm really proud of what our team has accomplished. They continue to learn things. They continue to aggressively drive improvement, and we've built a culture of performance from that. And employees understand the metrics that the company has to achieve and the metrics they have to achieve. And it's amazing how people will step up to the plate when you give them the power to do that.
That's awesome. And kind of an extenuation, it's a good segue actually. You talk about empowering your people. Compensation's obviously a big component of empowering, motivating, attracting top talent. So stock-based compensation, that's obviously a retail concern or question that we get a lot. I recall in one of our prior videos you had said this plan encompasses the entire company within Riot. And I heard on the earnings call today you said your current headcount of full-time employees, I think, was right around just shy of 800. So can you talk to us a little bit about how this stock plan actually works and what you would say for people that have questions about this topic?
Yeah, absolutely. So, the first thing that's important to note is when you see stock-based compensation on our financials, that's an expense that's being accrued. That does not mean that compensation is being earned. So, for example, in Q4, I believe there was approximately 32 million in stock-based compensation. I don't believe anyone earned anything. I certainly did not. That was not earned. What you're seeing is the expense of awards being made over time. Riot's what we call a long-term incentive plan. It's about two-thirds performance-based, one-third time-based. So it's mainly driven by how Riot's share price performs over a 3-year performance period. And as if Riot outperforms market indexes by different amounts, that's how that award is ultimately earned. So what you're seeing expense, not something that's been earned yet, and it's not something that's being really earned anytime soon. It's if Riot share price performs, then it will ultimately vest in the future. What we do is every year we make an award under the structure, so employees have different tranches of performance and time-based awards that they're earning. They don't generally earn them, once again, until the end of the 3-year period, but they are expensed over time on our balance sheet. So a lot of work had to be done to make hundreds of people a part of a stock-based compensation program. Some people don't have bank accounts even, and you're getting them set up with a brokerage account. A lot of investment in education, understanding, helping employees understand how this program works and how they can participate in the upside from Riot and how they play a part in driving share price appreciation in Riot was all, I think, a very important exercise. And that's what all kind of goes into that stock-based compensation program. So, it is what you see on the financials. That is an expense. That does not mean it has been earned yet or paid out. The vast majority of it has not been paid out. And it's a program that all of our employees participate in, and it is performance driven primarily, not so much time-based service driven.
Excellent. I mean, we talked about the culture of the organization, and on a recent update, you just made an announcement. You've added three more directors to the board, and we know those in the space will recognize one of the names straight away. James Levinson from previously the CEO of Hut 8. Can you sort of like just summarize briefly what these three individuals bring to the Riot Platforms board?
Yeah, so as we started looking into shifting our strategy to focus more on the AI HPC front, our board of directors is always looking at the skill sets that are needed in order to support executing on that strategy and monitor and advise management in its execution of the company's strategy. So in supporting that, we added three directors to our board. They bring real data center development experience. They bring real asset development experience and across the board public company and corporate governance experience as well. So a real key focus of bringing in the skill sets applicable to what we are doing with AI HPC, what we are doing and executing in that strategy. I think those were all very positive changes, and really excited to work together with this new board of directors in executing here.
Yeah. Final thing for me is, we've talked about Rockdale, we've talked about Corsicana, we've talked about the possibility of 600 megawatts going into high performance computing once the study is completed. Are Riot currently looking at other areas? And I think obviously we've got the block facility in Kentucky. Can we talk about very briefly what the plans are, if so, to sort of expand that facility and what that could be useful?
So the Kentucky operations comprise of about three different facilities. All of these facilities, smaller scale facilities, but all of these are, collectively being expanded in some way or another. So that's where really all of our hash rate growth is coming from in 2025. Beyond that, the basis of our strategy has always been procuring power capacity. That is what's given us the optionality to do Bitcoin mining and is what put us in this position today to execute on AI HPC. So I think you'll always see us looking at opportunities to add power capacity because of the additional value that unlocks. No immediate plans to do that, but we're always keeping our eye on the market. But I think the core focus at this point is looking at the power that we have and seeing how to maximize the value of that power with an AI HPC data center deal.
Great. Hey, Jason, I know we've covered a lot today. Very insightful. Wanted to give you the opportunity to close out here. Also mention to the audience that you're going to be making your way to New York as well and actually speaking at Bitcoin Investor Week, I think on Thursday. So we'll be watching your presentation there. But wanted to thank you for the time, the insight, the details as always, and give you an opportunity to close out.
Yeah, thanks, Bryce. Looking forward to being at Bitcoin Investor Week, seeing a lot of people there. Probably will see you guys there and do some cool panels. That'll be an awesome trip for sure. I'm really excited about the position Riot's in. We have improved our Bitcoin mining operations tremendously, and we are still working to drive improvements there. That is the basis of our ongoing financial results. That contributes to our Bitcoin yield strategy, which has continued to increase the amount of Bitcoin per share that Riot shareholders have over time. That's driven by the growth of our Bitcoin mining operations and the low cost that we're able to drive them at. So really excited the results that we have there. And now this new strategy that we have underway, like I mentioned, this is something that we had been thinking about and working on for some time, and it's bubbled to the surface as we've had more conversations and we've put the work in behind the scenes. Our assets are incredibly valued for this pursuit. Corsicana with power available today in a major data center market, and Rockdale even with power available in near a major data center market as well. We think this gives the right company a huge advantage in the AI arms race. So we're going to be aggressively pursuing this. We're going to continue to update the market as we're making moves and having progress made on this pursuit over the coming period here. So really excited. We'll definitely be coming back to talk more about it as we get there farther along.
Yeah, we can't wait, along with the rest of the retail investment community, for that next big HPC AI announcement. So we'll be here waiting, eyes and ears open. Jason, thank you again for the time today. Congratulations on the successful quarter and 2024, and we'll see you soon in New York.